your trading is going nowhere. You're making mistakes that are costing you money. I had the same problem before I discovered price action secrets. Now I'm consistently profitable. So, what is price action? A stock's price movement can provide valuable information to make informed decisions. Technical analysis of the data is used to better understand its trend toward a given direction. Many traders rely on the prices and on possible trends they can notice to make their decisions. This is also true for short-term traders. Technical analysis is a practice that's based on prices since it uses past price data in its calculations. Today's key takeaways. Price action is the way a security's price moves over time. There are various ways to display a chart, no matter your trading style. For instance, you can choose to show only the price action instead of the daily and weekly price ranges. This looks is for those who want to focus on the latest price moves and may not be relevant for those traders who need a long-term view or are looking to buy and hold. Price action has a huge impact on the way that technical formations and patterns occur. Tech tools like moving averages are all based off of it and can be projected in the future to trade more efficiently. What does price action tell you? Traders have the ability to see and read about price action that's plotted on charts for time. They can use different chart compositions in order to improve their trend spotting, breakouts, and reversals. Many traders use candlestick charts since they help them differentiate the open, high, low, and close prices. This makes it easier to visualize when prices fall or rise. Candlestick patterns are all forms of price action that can be interpreted visually. Some examples include harami cross, engulfing pattern, and three white soldiers. There are many more candlestick formations that can be generated off price action to set up an expectation of what will come next. The same formations can apply to charts like point and figure charts, box plots, or anything else. In the work of technical analysts, they use the formations on a chart, like the shape of a triangle or downward slanting line, as well as so-called price action data that can sometimes seem random. This helps them find order in what would otherwise be difficult to recognize patterns. For example, an ascending triangle pattern in a price action chart may be used to predict a potential breakout because it means that the bulls attempted to break out several times and got very close. How to use price action? Price action is not usually seen as a trading tool like an indicator, but rather the data sources that support all the other tools. Swing traders and trend traders typically use price action rather than fundamental analysis to predict breakouts and consolidations. Even high-frequency traders who mainly follow the market trend must consider other factors such as volume and time intervals, as they can stumble on false positives. Okay, without further ado, 7 price action secrets every trader should know about. Tip 7. Chart phases. It's not always easy to see what happens with the price of Bitcoin and Ethereum. You could see it going up, down, or staying flat. However, as we've seen from the candlestick analysis, this can help you make better decisions because you're looking at a more simplified version of the bigger picture. Tip 6. Give me volume or give me death. Trading with volume rather than just price movement is a strategy which can be used in the Forex market. It is a strategy of trading with certain volumes of shares in order to make profit from the difference between the bid and ask prices. This trading strategy is based on the assumption that traders will buy and sell at different prices. The trader will buy at the low price and sell at the high price, which means that trader will be able to make profit from both buying and selling. Tip 5. Multi-candle patterns are more reliable. Patterns with more candles are usually more reliable. 3-candle patterns are better than single-candle ones. Patterns with 30 candles are usually more reliable than 3-candle patterns. Some of my favorite patterns are head and shoulder tops and double and triple tops. As long as they're followed by higher probability trades, the rest is irrelevant. They're what we're all after. You might say that a good pin bar setup won't always work. It just means there's a higher chance of having these multi-candle setups result in a winning trade. Tip 4. Pinpoint precision. is a trading strategy that is based on technical levels. It can be applied to both breakout and pin bar trading strategies. The breakout trading strategy is based on the assumption that price will break through a set level, which in turn triggers an order to buy or sell. Pinpoint precision is used to identify the exact location of the breakout to maximize profits and minimize losses. Pin bar trading strategies are based on a candlestick pattern where the short, thin part of the candlestick resembles a pin bar. Pinpoint precision can be applied by identifying where best places to buy or sell are after observing an uptrend or downtrend in prices over time. Tip 3. Nothing but shorts. As the market is going down, traders are looking for ways to make a profit. One of the most popular strategies is short trading. A short trade is a trade in which you sell an asset that you don't own and then buy it back at a lower price. As such, you will profit from the difference between the current price and your purchase price if the price goes down. The basic idea of a short trade is to sell high and buy low in order to generate profits when prices go down. Short trades are also very popular for traders who believe that prices will decline in the future. Tip 2. The bigger the better. The Relative Strength Index, RSI, is a technical indicator that measures the magnitude of recent price movements, then plots them on a chart. The RSI is used to determine when an asset may be overbought or oversold. It does so by measuring the size of recent gains and losses and plotting them on a chart. The RSI is plotted on a scale from 0 to 100 with values above 70 considered to indicate that the asset may be overbought and values below 30 indicating that the asset may be oversold. Tip 1. The trend is your friend. This is one of the most popular and important trading strategies in the stock market. It's based on the idea that it's better to trade with the trend than against it. The strategy can be applied to other markets as well, such as Forex and cryptocurrencies. The bottom line. Price action is the term used to describe the movement of prices in a market. It includes things like trends, support and resistance levels, and volume. Price action trading strategies are based on the observation of price movements. There are many different types of price action trading strategies that traders can use when they trade. The term price action refers to the movement of prices in a market. It includes things like trends, support and resistance levels, and volume. Price action trading strategies are based on the observation of price movements. There are many different types of price action trading strategies that traders can use when they trade. Compared to other strategies such as pattern strategies, price action strategies are much more powerful and fundamental. The level of success depends on the strategy you take. If you make a great move, it can allow you to extract a lot of money. VIP membership is another way to increase your trading portfolio's value.
Please like, subscribe, and hit that bell button for more videos.